it on my YouTube and go from there. So
Okay.
first thing first, I'm gonna go ahead and I'm gonna pull up spot charts to look at what all went down last week with it. Can y'all see my screen?
Yeah, I can. Yeah.
Okay. All right. Turn this on so I don't get no crazy stuff. Um, this is spy so far. One thing I want to do, one thing I want to tell you guys, if you do chart and do technical analysis and things like that, one of the ways that I found best in order just to learn how to read the market is learn how to read the market without indicators. Indicators are mostly used to pretty much help uh, work in confluence with what you see without any indicator. So, as you see, excuse my sniffing, I got my allergies acting up today. So, but as you see, I'm always gonna draw the blue line as my secondary support levels. My immediate trend levels are always gonna be white. And then, of course, my green lines are going to be um, support above the current trend. And then the red is going to be where I'm going to be looking for resistance or an opportunity to take profit if I did jump in calls down when it was trading on support level. So the orange are going to be profit taking or expected move to. So like right now, I got 548, which lets me know if we break below this 557 level, I'll start looking for a downtrend. Once it breaks here, we may see like a little drop. We may get a retest, but eventually I'll be looking for that move down here somewhere. And you'll see me draw orange price targets around there just to say this is where I'm expecting that move to make. So I'll eventually change these orange lines to green, which those will be levels that we'll be buying at, and then I'll redraw my charts and make new red resistance levels in order to show you guys where to expect the price to start slowing down, or if you're in a play, where to start taking profits or trimming it. It don't necessarily mean you got to completely get out the position, but one thing I always do teach is go long expiration because you don't know what's exactly going to happen that day. Friday, I had a lot of downside plays that I thought that we were going to be able to take. And as we seen, Q, Spies, Amazon, Apple, everything went green and just broke above the actual levels that I had. But right as we went into closing, we all seen what happened. It completely rolled over and it most of the market went back red. So um, I just wanted to take a moment to explain when I be drawing these charts what exactly it is that I'm looking for, how you guys can read it, knowing where to buy, knowing where to sell, knowing an expected movement to the downside or the upside. So right here is my current trend level. It's pretty strong. We do have so far we have two bounces on support. We have a bounce here, and then we have a bounce here. So as long as we keep these levels right here, those levels are holding, we can always be able to buy calls off of this white trend line. But the thing is, if it ever breaks and you'll hear me or read me post something that says watch for a break below 557, that just means that the current white line is breaking down and the stock price is breaking below that. So once it breaks below, I start going look for where's the projected price within the next upcoming days. It might not always hit that particular day, but I'm always trying to tell you what levels to look for within the next couple of days. Hey, if we get those moves that day and we all hit big, then hey, congratulations. We played a good play. We held through the storm or the mooning, and we made some good money that day. Right now the spot it isn't as bad as I thought that it was gonna be going into Friday's close. We had a nice little 3 bar pattern here. Thursday going into Friday had a nice 3 bar pattern, which it completely saved it from being a big bearish engulfing candle Wednesday going into Thursday. Just that dramatic sell off that we had Thursday. I thought that things were gonna be a little worse than it was, but it didn't. I know investors are glad that it didn't, and a lot of people made money on spot calls. Um, I always start at the daily and I work my way down through the hourlies, and then you will see me probably navigate through the 5 and the 30 minute if I'm just trying to really break down an entry. So if I was playing this on a 30-minute chart, we would have saw this U-shaped recovery here. It bounced nicely off of this trend line here. And as soon as the market opened Friday, it completely flushed out the bears and ran all the way up and retested the previous day's highs. It rejected once and it briefly dipped, but it came back and it broke above yesterday's highs in order to make new highs for the week. And whatever happened Friday, it just completely flushed almost half of the gains that it made off of opening. So Monday, we can expect for, possibly a flat opening. Um, I don't really see the market gapping up or down each direction, but we can't really predict when that's going to happen. So I would probably expect for the market to open flat. And one of the things that I always recommend is waiting about 30 to 45 minutes before you just really enter a play. Reason why is because um, the first 15 to 20 minutes, it's a lot of contracts and options that's being written. So it'll make it have a very wide bid ask spread in the contracts, and that'll cause for delays to get filled, or that'll cause you to open up an options contract and it already be in the negative. So you pretty much start off with the price action having to work hard in order to get you back zero and then get you in a profit. So I tried to wait at least 15 to 20 minutes and I watched the contract bid ask spread tighten up. If it doesn't tighten that day, I'm going to another stock, something that's more liquid that day. If not, um, I'll just wait for that bid ask spread to tighten down to maybe, $10, $20 difference because you'll see some wild spreads, like on SMCI or MSTR, AVGO, some of those big name stocks that trade super volatile. You will see bigger spreads, which means um, you have to be very, very cautious on taking entries and your order fills in order to avoid opening up a contract and being, already 15 to 20% down in the hole. If anybody has questions while I'm talking or anything, I mean, just feel free to chime in, stop me, let me know if it's something that you see or want to know. Um, I'm open to answering any questions. But yeah, Monday I'm kind of expecting us to open flat, and then we'll see possibly some type of consolidation here before making an up or down move, and we'll just play that accordingly. The cues, they're kind of painting a different story, and I'll chart one out just to show you guys when I'm drawing these lines what exactly it is that I'm seeing. All right. So if you one thing you'll probably notice about my charts is I use candle bars and not candlesticks, like majority of the charts that you see. The reason why is I don't really need the body of the candle to trade. All that I really want to see is the opening and closing prices of a particular day or the hour. It doesn't matter. I just like to see opening and closing prices just to see how much of a price difference it is between each candle. So I always start off at the daily. If it's kind of harder for me to see a trend, I'll move up to the weekly. The most that I'll probably move up to is possibly the 3 month chart. But I always start at bigger time frames and I see where the longest trend may be. And I keep zooming out until my eyes can visually see a trend that I like. So right now, I see this one as being probably one of the strongest long-term trends. So once I find it, now it's time for me to pretty much go in and see if I can find closer near-term trend patterns. So I really I don't like horizontal patterns. I like rising trends to see, all right, when can the price bounce and recover very sharply in the upward motion? Um, because you can always find a horizontal trend and it just shows consolidation, but I'm always looking for growth. So I'm gonna find all the rising trends that I can find, and you're not gonna find all of them. You just can do the best you can into finding the stronger ones. And then once I find them on the weekly, of course, I'm zooming down on the daily and I see how well those lines are matching up on the daily. If some of them are kind of off, you just come down to the smaller frame and adjust them. And every time you move down a frame, you're always going to see a little bit more detail for you to take advantage of. If you guys haven't noticed, like I'm very big on precision. If a price supposed to bounce, I want to know exactly roughly 50 cents to a dollar where their range is going to be because I don't like to get stopped out of contracts. Even though you're supposed to have your stop loss set, I don't like being faked out. So if I can get as close as I can down to the level before it recovers or rejects, I'm always gonna try to get it down to that 50 cent to a dollar range. So right now, um, I think I got all the rising trends that I like. So as you can see, we have 5 trends. Out of these five, I'm only looking at 3 of them. So I'm turning these blue because right now they're no threat. They're not important. All right, so now I have all of my rising trends. Now I'm looking for any descending trend lines. So the first one that I'm gonna look at that I see is very very small. That's probably all of the resistance that this pretty much has right now at the moment is that. But that's all you need to create a pattern. You get a day to where it finally makes a top, then you get a following day to where it opens, where the price opens where it closes the previous day, and shortly after it sells off. That's all you need to show. That's all that I need to show me. All right, here's a possible pattern that we can start, a triangle pattern that we can start playing until it breaks up or until it breaks down. Um, I might actually got a close one right there. If it's too close, I don't want to force you. So here is my immediate trend right here. So now I'm gonna start going in the 4 hour and working my way down through the hours. I don't want to draw too many trend lines after I get out of the daily, like the 4, the 2, and the 1 hour, which those are the hours that I use. I'm not gonna jump too far into those because I don't want to make um too many trend lines inside of the strong ones. Like you see a lot of people draw a bear flag or a rising wedge, some type of pattern that you can draw it on like 30-minute charts or 5-minute charts and play it on the minute. That's too much work for me. I like the daily time frames and up because most of those levels or those time frames are mostly respected. You can expect a bounce or resistance, or the bigger the time frame, the bigger the breakout's going to be. So now that we're somewhere in here, I'm going to start finding my support levels. So normally I look for a cluster of accumulation. So one of the levels right now that I see on a 1 hour, it'll be this. That'll be that'll be a level of support. So anywhere around here, I can expect for these this price action to start being respected for the move back up anywhere close to this rising trend line. So even if I was to buy in here and it dipped down, as long as this trend line is respected, it's going to recover. This will actually probably be a average down if I'm in a contract, and as long as it doesn't break, then I'm fine with it. I'll make up my I'll make up my loss from the first entry up here down here, and I'll make that recovery back up, and we might see some sideways movement until it decides to push up more. But this is how I start finding out where's my support's gonna be, and probably this little zone right here. That'll be where I would start lining up my resistance at. So when I see stuff like this, you might see a bounce right here and it just heads back up, or you could see, like I said, a bounce here before it just consolidates, or you could see a complete flush and then a huge jump back in here, or let's not say that high, probably somewhere around here. But all this is your chart and your technical analysis. All it is, you just looking at the backstory to predict what the future's gonna do. Nobody has an advantage. Nobody has any secret indicators. Nobody has anything unless you just got inside information. But all you're doing is looking at what happened in the past to try to put together what's going to happen in the future. So if you see big ranges of accumulation or sideways movement in the price action here and a sharp move up, then that means you should see the same thing over here. You see some downward movement, small amounts of accumulation before a move back up, as long as it doesn't break below and decide that it wants to go down. If I'm trying to find my move down to this next level of support, I'm doing the same thing. I'm just looking for a price range to where the price moves sideways or a U shape or a V shape recovery, and you just line it out to pretty much here. So notice I went on a 2 hour. I found this little movement up here to where the price consolidated looked like for a day in these zones. I followed it over and saw that it was a huge, looked like okay. It opened high, where it opened low, it shot up, and then it came back down, closed, and then sold off. So that's why I like these candle bars, is because all I need to do is see the opening and closing prices and it tell me what exactly happened that day or that opening of that particular candle. But we see once it got back over here, it completely squeezed them out and made a run up. So when I see a lot of price action or sideways movement in the zone, all I'm doing is I'm going here, I'm following all the way out to the next level of my trend line, and then I'm going and I'm finding top and bottom prices. And of course, those levels, I'll show them orange because that's just the level that I'll be searching for if it did break. And when I remove the box, just to simplify stuff, that's how the levels start playing out. Everybody with me? Anybody got any questions? Anything? No? Cool.
I'm new, so I'm just watching and learning.
Okay, cool. That's fine. I'm just trying to
I have a
make
lot to
sure
learn.
it's fine. Hey, and that's what I'm here for. I've been through the tuition part of the market and paying my money to them, and I read plenty of books. And I watched YouTube. I paid for some Discords, um, and been in a couple of different Patreons on my way to figuring this out. And eventually, it started making sense. So my goal is I don't need I don't need a million traders, 1,000 traders. I just need a handful of people that want to learn and do it safely. I still work my 9 to 5. I know everybody else not trying to. Well, some people are aspiring to be full-time traders, but you don't have to. You can like I have a family, so I like to keep my benefits and things like that. And I know other people do too. So this is just my way of giving back to people that want to learn because I understand the struggle of trying to be able to be sustainable in this market is it's a very challenging journey, but with the right guidance and it's a lot of degeneracy in the market now, a lot, and people are trying to get rich quick, and that's one of the easiest ways to get snuffed out of the market, and it's one of the hardest ways to make money because you never know which player is going to be the big one. So, uh,
How long did you learn before you started doing options?
crazy thing, I jumped straight into options. I didn't even take the route of buying stocks, which I probably should have because I would have learned that price action is the most important thing first. Um, and it took me about 2.5, maybe 3 years to just really understand it. But I had to do a lot of work on my own, which some people don't think to do. A lot of people take signals. I've ran my own Discord. I've been an analyst for a couple of different people that still have their own Discords or servers. Apple, which is one of the guys that's on After Hours, he's the market analyst for Quant Data. I was one of his analysts for about a year or so and did plays in one of his old servers before he fully transitioned over to Quant Data. So I've seen how I know how struggling it can be. I know how struggling it can be. And it takes about 2 years of just journaling, writing down what you've seen in the market every day, looking at old screenshots or just researching the market back and forth to know how it exactly it moves. Uh, I had to stop looking at the news for a while because I realized that retailers get news way after the moves already happened. So
Absolutely.
if you're depending on the news to help you trade, a lot of times you're always going to drop the ball. You're going to have late entries. You'll probably get into a call on a Monday and it completely drops after good news just came out. And then here goes Thursday, makes a recovery back to the prices that you bought it, and then rising above that because the institutions know how most of the retail traders' mind works. You ignite the
Learned that is
news.
just trading stocks. Like
Yeah, Yeah,
And that's what I started out trying to do, is going off the news, and that was a huge mistake. Mm-mm,
right.
can't
So
do it.
you
And
can't.
I've been trading stocks for about a year and a half. Like, I've been
Okay.
buying stocks for a while. So, and I've been studying charts, and I've been watching YouTube videos, and I've been following you, and I'm trying, but I'm still just not confident.
Well, it takes time. It definitely takes
I
time. You're
don't
not
want to make big losses. I'd rather do
right.
like you're doing and get small gains than
Mhm.
take huge losses.
Right. And I always preach stop losses. To be honest, that was one of my weakest problems with stop losses because if you don't know, it only takes a matter of 30 seconds between your emotions and logical thinking start fighting each other. And what I mean by that is, let's say you in a play, even if you're long on the options call and you were confident in your entry and it didn't work. So instead of you watching it drop down to 20, you're going from, all right, logically, I know my stop loss need to be between 20 to 25%. But I know the stock's supposed to go up. Well, that 25% now turns into 50 and 50 turns into 65. And now it's nothing that you really can do but hope and wish that something comes out to reverse the price action and put you back to where you just want to minimize your losses.
Mm-hmm.
It takes 30 seconds for your logical thinking to say, take my 20% loss and get out, and I'm gonna wait. That's all it takes for the price to drop out, and now you're holding and you're losing way more than what you should have. So once I started setting my 25% stop loss, just depending on how volatile the stock is, it it made my trading more mechanical and less emotional. Because
Yeah.
now even if I'm not watching it, like I said, no, sometimes I get into an entry and I work off alerts. So once I get that price action alert, I get into it and I'm like, all right, cool. My entry shouldn't drop me any more than about 25%. Well, if that stop loss hit and I turn around and look at my phone, that just took that emotion of me wishing that it go back up out. And next thing, normally when I when my stop loss takes me out, it's a good thing because the price action normally keeps falling where it would have put me in a position to be down 60% or something like that. So that's why I always preach everybody, even if you're new, even if you're experienced, set a stop loss because everybody's human at the end of the day and everybody's emotions can kick in at any given time and cause them to make irrational trading decisions.
So, do you do the trailing stop?
No, normally I don't. I don't. What One of the things that I do, I trade a lot for daily profits. So depending on the volatility of the stock again, if it's something that I know moves, say if I jump in AVGO, that's something that I only have to trade one or two stocks at a time, one or two options at a time with because it can move so fast. You're gonna get $300, $400 within probably 5 minutes. So um once I get that $500 or that 20% or that 30% out of it, I'm normally out. And if I'm in something like recently Nvidia, since the price action since the price has been split up and it's cheaper now, you can go heavy in those contracts. And my thing is, if I'm gonna go heavy in the contracts, I'm trimming 75% and I'm letting the other 25% work for me. And that's how I've always done because there's no way, even if I lose.
Are you there?